Hey friends, welcome to today's Singapore Market Digest. I'm Wei from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. Let's dive into the key stocks making waves this week. Let's kick things off with Mapletree Logistics Trust, a heavyweight in Asia's industrial and logistics real estate sector. The stock closed at 1.27 on Tuesday, down 0.8%. DPU fell 10.2% to 0.6098 over 9 months. Revenue dipped slightly to $182.4 million, dragged down by weaker performance in China, currency headwinds, and properties they sold off last year. Technically, MLT's share price has been bouncing between SW1.25 and SW1.30 since November. The stock is hovering near its 200-day moving average, which could act as support. For logistics REITs like MLT, the story remains cautious. Slowing demand in Asia and high interest rates are pressuring profitability. Investors might want to watch for stabilization in occupancy rates and currency trends before jumping in. Next up, SingPost, Singapore's national postal service, is making moves in the boardroom. The stock inched down 0.9% to 0.5355 on Tuesday, but the bigger headline is their new group CFO, Isaac Ma, who previously led finance for their Australian operations. This appointment is part of SingPost's long-term succession plan, aiming to streamline operations as the company pivots toward e-commerce and digital logistics. SingPost shares have been stuck below their $60 for months, reflecting broader challenges in traditional postal services. However, their push into logistics and cross-border delivery could be a bright spot. Technically, the stock needs to break above $0.58, $0.60 resistance to signal momentum. For now, it's a wait-and-see play as new leadership takes the wheel. Now let's talk green money. Cromwell European REIT, which invests in European commercial properties, just priced a $705 million green bond offering at a 4.25% coupon rate. The funds will refinance older debt and finance eco-friendly projects, a smart move as investors increasingly favor sustainable assets. Units of its parent entity, Stoneweg REIT, rose 0.6% to €1.57 ahead of the news. Cromwell's technical chart shows a slow grind upward since October, but it's still stuck below the €1.60 resistance level. The bond issuance adds liquidity, but high European interest rates and energy costs remain risks. Compared to Singapore-focused REITs, Cromwell offers geographic diversification, but you're also exposed to euro volatility. Keep an eye on how they deploy these green funds. Finally, some good news in the REIT space. Sabana Industrial REIT reported a 32.2% jump in half-year DPU to 0.0152, lifting full-year DPU to 0.0286, 3.6% YOY. Revenue climbed 2.7% to $58.1 million thanks to strong rental renewals across its Singapore industrial properties. The stock closed at 0.375 before the announcement. Sabana's chart shows a steady uptrend since late 2023, with prices testing the $0.38 resistance. If it breaks through, we could see a run towards $0.40. Industrial REITs like Sabana are benefiting from Singapore's tight warehouse supply and stable demand. However, its smaller size means higher volatility, perfect for traders but risky for income-focused investors. So what's the takeaway? REITs are a mixed bag. Mapletree and Cromwell face macro headwinds, while Sabana shines with rental growth. SingPost's leadership shakeup adds intrigue to its turnaround story. For traders, Sabana and Cromwell offer short-term momentum plays, while MLT might appeal to bargain hunters if it holds support. That's it for today's market wrap. Keep your eyes on those key levels, and remember, stay diversified, stay sharp. Catch you next time on the Investing Iguana. So what's the takeaway? REITs are a mixed bag. Mapletree and Cromwell face macro headwinds, while Sabana shines with rental growth. SingPost's leadership shakeup adds intrigue to its turnaround story. For traders, Sabana and Cromwell